Hello and welcome to FHAlenders.com. Today we're going to talk about FHA adjustable rate mortgages, what they are, what the difference is, how they put the rates together, all kinds of things. Hopefully you'll learn enough here. And if you'd like a quote from a lender about an adjustable rate mortgage for FHA or even a 30-year fixed, just follow it to the link FHAlenders.com. We'll put a link in the description and also the first pinned comment. So an adjustable rate mortgage is a mortgage program that's fixed for a predetermined short number of years, and then it will adjust annually after that. So there are multiple options for an adjustable rate mortgage: a 1-year ARM, a 3-year ARM, 5-year, 7-year, and 10-year adjustable rate mortgage. And those mean that they're fixed for 1 year, fixed for 3, fixed for 5, 7, or 10 years, and then they'll adjust each year after that. Now, every lender does not offer FHA loans and all of these adjustable rate mortgage term options. So you'll find that that's not the case. The most popular one is the 5-year ARM, where you're fixed for 5 years and then it adjusts for every year after that. Now, how does the lender come up with the rate? How do they determine what that start rate is? And then also what your adjustment is going to be each year after that. So the first thing is you'll have a start rate for the first, using the 5-year ARM as an example, the first 5 years. And that rate is usually lower than the 30-year fixed, and that is why people are interested in the ARM, because they want the lower rate, they want the lower payment for the initial term. Now, the lender comes up with the rate by taking an index, usually the LIBOR, which is the London Interbank Offered Rate, and they have a margin, let's say 2%, and together, combined, they equal your interest rate for your mortgage. So let's say the LIBOR rate is at 4 and your margin is 2, your rate would be 6. So each time the rate adjusts after the initial term, let's say after year 5, and then the rate will adjust, the lender's going to look at, okay, what is the LIBOR rate today, and they take your margin, which never changes over the life of the loan, add it together, that's your new rate for the next year. Now, there are caps also on these types of loans, these adjustable rate mortgages. The caps are to prevent skyrocketing rates and payments on a mortgage that you had already locked in. So let's say you lock in a rate at 6%, and it's an adjustable rate mortgage, and rates go through the roof. Let's say they go up 10 points in the next few years. It would be a huge problem for you to see your payment jump so drastically if your rate went from 6% to 16%. So they have these caps in place. And the caps are typically no more than a 2% rate increase at any given time, in any given year or adjustment period, and no more than a total of 6% over the life of the loan. That's what you're typically going to find on an FHA adjustable rate mortgage. Let's talk about the pros and cons of an FHA adjustable rate mortgage. The first thing is that you're going to get a lower payment, lower interest rate initially. And if you're not going to plan to live in the house for more than, say, 5 years, this might be a great option for you, because the downside is very small, since you're not planning on living there forever. You're going to have lower monthly payments, and you might actually be able to qualify for a larger amount. That's another benefit, because the lower interest rate and the lower payment means you could afford more home. So if you're at one of those spots where you're trying to get approved for a $300,000 mortgage and you're only approved for $275,000, you might want to look at an adjustable rate mortgage that might put you over the edge. So the negative for an adjustable rate mortgage is you're not locked in for 30 years. There's uncertainty of where your next rate adjustment is going to be. Could be lower, could be higher. It could go up by 2% after the first adjustment. You're not sure, so you have that uncertainty. So that's a negative. And also your payment, your payment will increase if the rate increases. So that's the other issue that you have to think about when applying for an adjustable rate mortgage. So hopefully you've learned a little bit about FHA adjustable rate mortgages here. If you want to get a quote or learn about them further, just follow the link down in the first pinned comment and in the description to FHAlenders.com. Someone will have a great conversation with you and get you pre-approved if that's what you're looking for. Thank you for watching. We will see you next time.